Good evening all, hope you're doing well. We are on a state of complacency. We had a very heavy week last week and we look like we're going a little bit risk off and we are still going towards a neutral, but the movement was very slight. And as just said in Discord, look at the change from last Monday. It's hardly moved across multiple instruments. Admittedly, it's moved on DAX and Kiwi, but not much. And it's moved quite a bit in oil, but really there's not much been changed since last Monday, which is really weird. So it's just one of those funky days. Look at the change from yesterday and the Sunday prior. Huge change, but this has hardly changed at all. So it's what's actually happened today is that we have pumped on the risk calculation on the technical data. And what happened is that the herd have sold risky assets, and because of that, there hasn't been much desire for a strong USD, not much desire for the strong US yields, and you see the VIX is negative, so that would make sense. And the VIX is negative and the indices are positive, so that would be a normal correlation. Tesla's really going for it, and Apple's moving as well. It's from its AI connection. Like vibes, you can probably think, oh, it's moving on speculation, and does it really warrant a 3% move? Probably not. But if we have to remember, a 3% move on Apple is momentous. It's absolutely humongous. We're talking like mega bucks. Okay, a 1% move is a lot of money. A 3% is huge in a single day. And so obviously we are risk on, as we can see, and that's really pushed the technical scores higher. And so we are in a state of complacency. I think we'll probably likely go to euphoria, but we have to be a little bit careful here. But really, it hasn't really been much movement since last Monday. Look at the Euro USD, 1.11, and then a week later, like now, 1.14. So it's hardly moved. It's probably whipsawed, but we are exactly pretty much where we were a week ago. So it's really strange, considering yesterday was humongous change. So it might be something to do with the weekend. It might be something to do with the weekend, might it? Because they will shift, they will sell or buy going into the close. They might not want to hold over the weekend. Whereas the Monday to Monday doesn't have that weekend. Well, it does, but not so much as Sunday to Sunday, if you know what I mean. So it's just strange. We'll have a look at tomorrow's. If tomorrow is very slight, then that's going to be a bit odd. We saw like quite a big change from last Tuesday and the Tuesday prior. So it's coming from the 4th to the 11th. So we had seen some big change. And it'd be normal to see, like dark colours, like we have been seeing, but this was a very strange one. So as I say that they sold the indices, and I'll show you now. And it's going to be, like I said in Discord, it's one of those, the herd sold risky assets, so they pumped kind of day. Because if they sell risky assets, they're going to perform okay. And we have to remember the big picture is that we should be rallying anyway. So if they sell, it only adds to the bias that we're gonna perform well on indices. So I'll just show you gold quickly, and just a big chop. So they'd sold with the crossover for buy. Okay, and you're looking to get a SL there. You're going to enter about here. You could get a 2R trade there. Okay, so that's how you use that. And you try and get at least 2R on your trades. And then they'd gone long. So at that point, you'd probably want to exit, and then you could probably fade them. So you could look for a sell, and then your stop's going to be here. And you haven't really got a 2R so far. It's a 1.5 max. So there would have been a successful long, but a yet to be successful shorts. And what I think might happen with gold is that we're going to get the crossover for buy. So it's big chop, basically. Technically, it's a bit of a mess. We have had some support here from punishment box. We probably could argue he probably took an SLC out there, to be honest. It's at the round number as well. It would have been around, that would have been a stop loss cluster there, no doubt. They love their round numbers. So let me show you indices. And don't need to talk about the robot because it hasn't opened up any trades. So in a way that's okay, because then the video would be a bit shorter. And we don't really want like 17-18 minute videos. So you can see we already are strong. We already are a buy. So if they sell, like they have done, they're just there. It's only tiny that it's going to have any reason to rally. It will take any opportunity to punish the herd. And so we just seen them sell, and they've had to really get screwed. So 545. Oh God, it's horrendous, isn't it? 1, 2, 3, 4, 5 hours. It really, really moved. God, that's crazy. Now, well, the thing is, they'd sold, and so they've got punished. Now, what's happening? This is less shorts there because they'd gone short, and that's blown them up. So probably, well, we should be giving it another hour, and then we'll have a crossover, and then we'll be able to map a resistance box. So it's basically, it's technically we're looking for buys. Sentimentally, we're sort of looking for buys because look, 20%. There's 80% of the market participants are short. So if they're already short and then they add short, we're going to see a move like that. Okay, so just so you know, you only really want to be looking for sales if we're above 50%. And like I said about the S&P on the weekend, this is going to buoy the markets. It's going to keep things afloat because this is a humongous index. Basically, it's like the granddaddy index in the world. So obviously, whatever happens, this is gonna try and buoy, broader sentiment. And as you can see, it doesn't look particularly bearish. Because of that, it's going to send quite a few alarm bells for the bears. And you can be trading DAX, but DAX is kind of really looking at the American indices as well. Okay, we've had this big fall, but now they've sold, it could look for any reason to join the S&P, and it could pump. So we can draw a box. And thing is, this is politically motivated, and so this is the trick. This is a bit of a naughty chop here. So they'd sold, and they initially got paid a little bit. 1, 2, 3, 4 hours they'd got paid. So it's a little bit naughty, and we should be above that box, and we are. So that's okay. Okay, so its company was very naughty and misbehaving, and now we're above the box, so that's okay. And unfortunately, what's probably going to happen, they got chopped up so much down here, they've got frustrated, and I thought, sod this, I'm just going to hold short, and then I can always add short, and then I can average. All right, I can double down if it goes a bit higher, and that might be very, very bad for those guys if they do that. So you may have seen in your experience, you've entered, it's gone wrong, then it went okay, then it went into drawdown, then it did okay, and your profit and loss, and then it finally goes into negative, and you think, well, I was in profit, why don't I just leave it? And then that's what that's done. That's taught them to disregard their risk management and to hold on, and it could well punish them, and we could come up to here, which is going to be horrendous. It's 500 points. Well, actually not 500, that's 400 points away where we are currently. Quite possible. So just a little, warning there, and it teaches you to have terrible risk management, and it teaches you to disregard your plan, and it's just it's a very cruel market. It's just horrendous. You've got some sophisticated tools like this one that we're using, but you can't be doing this for 1, 2, 3, 4, 5, 6 hours. You just humanly, it's impossible. You're gonna get chewed up unless you're really careful. And 6 hours of torment will make you think, well, sod this, I'll just hold short, and it will come down, but not necessarily, because you have to remember that's what the herd are thinking. That's like the collective mindset. It's bullied so many people over those 5 hours, and that's probably going to cut to punish them. So just be careful, okay? And do know that we're very much a buy at the big picture, okay? And US fairly. I don't mean to rant. I don't want to like sound like I'm having a go, but it's just an incredibly cruel thing that they do, and it teaches you all these bad habits as well. We're coming up to that box, which is strange. That's that box that we drew last week. We're very sideways. However, they're selling. Because of their selling, we can create a box. So just to sum up the video, is that they have sold risky assets, and because of that, we have pumped. And it is what it is. That's what happens. We already were a buy. If they sell when we're already a buy, it's going to add to the bullish bias. And up we go. And it could just be really, really boring. Monday, Tuesday, Wednesday, and it might get a little bit interesting on Thursday. So I can't talk about the bot because it hasn't opened up any trades, which is okay. It's actually quite cool in a way, because it's detected that the conditions aren't correct, and so it's just waiting. So quite a clever little programming that I did on the bot, and so far so good. And that's it. So I guess I'll just wrap up now. Be careful. Remember, we are risk on at the big picture, is that we are seeing that movement sort of depreciate a little bit, and we're going closer to neutral. But these kind of moves, they don't really give us much movement. They don't give us much bias or like direction really at all. I mean, DAX could be falling slightly, but we have to remember we are a buy. We were heavy buy, but we're still buy because we're minus. Okay, so if it's minus, it tells us that the herd are short. So if they're short, we should be going up. Okay, and likewise, they're long New Zealand dollar, they're long the Euro USD. But I think what's happened, like I just said into Discord, is that I think we're just shaking weak hands. We did take that one. We come down to the SLC, and we're coming up to the SLC, and I can show you an update, and then we'll just wrap up the video. Yeah. So yeah, just saying, down to SLC, up to SLC, and because the liquidity targets are so close, it looks like a cleanup operation to get the retail out of the equation, and I can't blame them for doing it, because they do cause a lot of skew, and they're kind of unwelcome. So there's probably 10 times too many retail traders than there ideally should be, and it's gone a little bit. It's gone a bit crazy, the amount of skew that they've caused. So I think just getting them out is going to benefit everyone, especially us, because we want to reverse those guys, And so that's it. So I'll wrap up now. It's going to probably be a boring day tomorrow, but okay if you're long risk, which you should be really, because we are a buy at the big picture. But if you're short and you're a bear, you're going to have to be a bit patient, I think. Okay, and gold's chopping up and down, and it's looking likely it's going to become a buy because they're going to sell it. Okay, so just keep an eye on your sentiment, keep an eye on your fundamentals and the technical. You should be okay, and we'll just see how we go tomorrow. But I think it's going to be quite boring. Okay, so I'll speak to you guys soon.